This is Business. I'm William Dada. Zimbabwe's National Assembly has passed the country's Reserve Bank debt assumption bill despite strong resistance from the opposition party Movement for Democratic Change. The bill allows the government to take over the central bank debt of more than $1 billion as a means to free up its balance sheet and allow for its recapitalization. The bill will be forwarded to the Senate for further scrutiny and, if passed, will be transmitted to President Robert Mugabe to be signed into law. Ghana's central bank has increased prime rate from 21% to 22% following a monetary policy committee meeting held to review happenings in the economy. The central bank governor, Kofi Wampa, said that the 1% increase in the policy rate was necessitated by developments in the global economy. Eunice Jerry Autry reports.
According to the central bank, a review of the latest economic data suggests that inflation and inflation expectations are high, with the current forecast suggesting a further lengthening of the inflation target horizon from the second half of 2016 to 2017. The development is largely driven by exchange rate pass-through, possible upward adjustment in energy and utility prices, as well as cost push factors associated with the persistent energy sector challenges. The Monetary Policy Committee of the bank further observes that challenges in the energy sector, fiscal consolidation, depreciation of the local currency, and the current high cost of doing business could weigh down on economic activities. According to the bank, external sector vulnerabilities also pose considerable risk to both inflation and growth. The committee further observes that fiscal performance in the first quarter has been encouraging, with the deficit as well as central bank financing well within targets.
Given the above considerations, the committee concluded that risks to both inflation and growth are elevated, but tilted more to inflation. It was therefore noted that a further moderate tightening, complemented with sustained fiscal consolidation efforts, could rein in inflation and inflation expectations. Consequently, the committee decided to increase the monetary policy rate from 21% to 22%.
This means that the cost of borrowing at commercial banks will be higher. Currently, interest rate is between 29 and 32%, and this makes borrowing from the bank a no-go area for most SMEs. It appears the central bank can currently not do much to bring down the rates.
If we have to lend money to the banks overnight or whatever, we do it at the policy rate +3. So it means that as at now, with the new rate, that has moved from 24 to 25, which is about the same as the T-bill rate as it is now. So that is the way we transmit our policy to the banks. Then that gets transmitted into the interbank rates, and then from the interbank rates to the rates like the longer dated instruments, there are lending rates, both short-term lending rates and long-term lending rates. That's how it's transmitted. So if we want to tighten policy, we increase the rates. It means that the banks will also increase their lending rates.
From January to 8th May 2015, the local currency depreciated by 17.2% against the US dollar. Developments in the foreign exchange market indicate a further weakening of the domestic currency in 2015. Eunice Ejare Autry, TVC News, Accra.
For the second day this week, the Nigerian stock market opens in the green, and this is happening after several weeks of negative trade. A stockbroker, Ibrahim Mohammed, now joins us on the telephone to discuss the market. Thank you for joining us on the news this morning, Mr. Mohammed. Now, we see that the market is looking up at this time. What reasons are behind this market behavior?
Hello, yeah. Hello. I can hear you better. Hello?
Market, Can you hear me now?
Yeah, okay, yeah.
All right. Thank you for joining us. We see
Okay,
that the
good.
market is
Yeah.
looking up at this time. What
Okay.
reasons are behind the current market behavior?
Yeah, I think the market is turning up largely on account of the fact that we've seen most of the equities traded far above, below their intrinsic value. I think investors that are actually watching, the bottom line are seeing opportunities in some of this stuff, and that's why, you're seeing, realignment in investment directive. Largely, I think it's likely going to continue today and probably for a good part of next week.
Now, some people believe that local investors don't take advantage of the Nigerian market, even as stock prices stay low. What measures are there to refresh their interest in stock trading?
Local investors are actually very active in the market. And don't forget the fact that the economy is not disconnected from what obtains in the market. And the GDP projection rate has actually dropped well over 6% to below 4%. I think that on its own will impact on the market negatively. Yeah, and the purchasing power for most of the consumers is actually weak. And that will naturally dovetail to the entire economic landscape. So I think we're going to see new direction probably from beginning of June, where the new incoming government will have been sworn in and will going to see a seamless policy directive.
Okay, what's your view on some of the trading results of companies reporting their first quarter transactions?
Yeah, sorry, I can't get that question, please. Could you take it again?
All right, let me take the question again. I asked what your view is on some of the trading results of companies reporting their first quarter transactions.
Oh, sorry, I can't get that.
The first quarter report of companies are being reported at this time.
Oh.
All right, I must thank you for joining us on the news. Ibrahim Mohammed, Nigerian stockbroker. Moving on now, resources titans Glencore and Barrick Gold are poised to dispose of their joint nickel expansion scheme in Tanzania. According to the Wall Street Journal, the disposal process may encounter problems because of price instability. The Tanzanian asset is among many that have been disposed of in the past couple of years as mining companies reorganize their investment portfolios and raise funds to fix their balance sheets. The two mining giants each own half of the Kabanga nickel project in northwest Tanzania. We'll take a short break now and return with more stories. Stay with us.